Goodman. You're listening to the weekend edition of the Korelin Economics Report. I'm Al Korelin. Corey and I are opening the show this week, which, by the way, is being recorded in its entirety from the Cambridge House Investment Conference in Vancouver, British Columbia. We're at the west end of the Convention Center. I have to tell you, there's a lot of activity down here. I am not necessarily surprised because, as I mentioned last week, and I think that Corey agreed with me, we believe, at a turn in the market. There's at least a turn in the area of interest in the junior resource sector. Does that mean prices are going to go up long term? It's hard to say, but the interest is truly building. Chatting right now with Lawrence Roulston. Lawrence, I have a question for you. You were talking about something that I didn't even know what the word meant, and that was bifurcation. What that basically means, as you explained it to me, is the real diversification is the wrong way to put it, but it's the real split in the junior sector among the very inexpensive companies. Some of those companies, in your mind, represent really good buys. Others don't, because you don't feel there's really any fundamental value in, say, as much as 50% of the companies. Could you talk about that first, and then we'll get into the other area?
Absolutely, Al. The key point here is that there's a real, as you said, a diversification of what's happening in the junior resource sector at this time. Previous rebounds, like in the beginning of 2009, the whole market bounced back up pretty quickly. Everything came up in tandem. It's very different this time. We're seeing this bifurcation. There's a lot of companies that appear to be cheap, but in my opinion are still overvalued. Look, a lot of these companies raised money in that period, 2011, 12, and they went out and they hoped to find a gold deposit. They didn't find it. They burned up all the money. They've got nothing left. It's kind of like holding a lottery ticket the day after the draw. There's no real value left in some of those companies. And as the values of those companies continue declining toward their fundamental value, which unfortunately is pretty much zero, it's giving the impression that the whole market is still on a downtrend. But at the same time, we're seeing the better quality companies that have a management group that knows how to execute, that they have cash, they have a good asset. The values of those companies are now on a steady uptrend. In my talk this morning, I demonstrated about a dozen stock charts that we're following in the newsletter that are up between about 30 and more than 50% over the last couple of months, as the smart money that always comes into the market at the beginning of the recovery focuses on those better quality companies. And that's what we're seeing now. These good companies are moving up, and a lot of the other companies are still on a downward trend.
Well, Lawrence, it is something that we've seen since, I'd say, October, November, is this growth in some of these mid-tier companies where they have gone up 50, even 60% on some pretty steady volume. But I want to focus on one aspect. We talk about management all the time, and cash is obviously important, but you mentioned the property, and I know your background is as a geologist. You look very closely at these properties. When you're analyzing some of these companies, are you going back to their most recent drill results? Or are you going back to the 43-101s? And what are you looking for in those? Because I know if you look at 43-101s from a while ago, they were projecting much higher gold prices. And the fact of the matter is, gold is lower than it was well back in the day.
And that's a very, very important point. But first, let me clarify. I look at the projects, but I also look very closely, first and foremost, at the management. But when I do look at the projects, I'm looking for projects that make economic sense in the context of today's metal prices or even lower. And you're absolutely right. When gold was $1,900 an ounce, there were a lot of gold projects, and silver was $35 an ounce. There were a lot of silver projects that looked pretty enticing and drove up the values of those companies. And now, at the current metal prices and a reasonable outlook for the current metal prices, those projects just don't make economic sense anymore. One day they will, but you've got to decide as an investor, are you speculating on a long-term metal price, or do you want to invest in a company that's going to generate near-term returns as the project advances? My focus at this time is entirely on companies that have projects that make economic sense at the current metal prices and are being advanced forward based on realistic outlook for near-term metal prices.
Lawrence, I think the thing that's really important for investors, potential investors, what have you, to realize at this point, number one, I think we might almost be entering, certainly a phase in the market, in my opinion, that's stronger than it has been in the last couple of years. If this thing gets into a mania type situation, though, I think even in spite of that, it's critical for people to work with folks like yourself, real experts, and really, really concentrate on due diligence. So many people lost so much money in the past because they let their emotions do their investing for them. That, in my opinion, is a critical mistake.
Absolutely a critical mistake. And the other part of that mistake, which is related, is there was an expectation that the gold price was going to go to the moon. And the silver price was going to keep going higher forever, and the copper price and all the other prices were going higher. So people were betting on a higher metal price. They were not doing the fundamental research and investing sensibly in a company. And that's exactly what they need to do now. They need to look first and foremost at the company. Does this company make sense? Now, having said that, and back to your point about what's going to happen and will it turn into a mania, I think it's going to be some time yet before we see that mania phase, but there is money coming into the sector. We heard Rick Rule commenting this morning that Sprott has taken in $800 million of new money over the last few months, and they've got another $600 million that they're working toward. That's $1.4 billion of money in one firm that's going to be allocated into the junior resource sector over the coming months. That and a number of other firms with similar sort of stories. There's a lot of money that's going to be coming into the sector, but it's going to be coming in rationally, sensibly, and over a period of time. But it's going to start with these high-quality companies, the companies that have a real project that makes sense at the current metal price. And as I pointed out earlier, these companies are moving, and by the time somebody rings a bell and tells us that the market is on a rebound, these better quality companies are going to be up 2 times, 5 times, or more.
Corey, we're in a really interesting situation right now. We've seen the good times, we've also seen the bad times, and clearly the bad times were really, really bad. I mean, of late, this has been the worst market that I personally have ever seen in 35 years in the business. But I really sense that it's coming back. And, I have to tell you, with all of the people who we're talking with on a daily basis, the Rick Ackermans of the world, the Docs of the world, everybody, I'm starting to see some real optimism out there. It's very, very important, I think, when this optimism grows, though, for people to go back and really go to fundamentals. Let's forget about, Lawrence doesn't think a mania is going to happen right now. He may very well be right, but the fact of the matter is there's a lot more enthusiasm right now, and that's when people have to be careful. Don't you agree?
I think what Lawrence said about the mania not coming back is an important point, because we don't have the same number of investors coming back into the market. We do have that smart money coming into the market, which I think is crucial, because that's when you start investing in fundamentals. You need to look at the stocks that you hold right now and think to yourself, would I buy them at these current metal prices? Because quite frankly, there are some stocks that, even though, as Lawrence said, they seem cheap, they're actually not cheap. They're still expensive for fundamentally what they are, and a lot of these stocks might end up going to zero, but the ones that will survive are the ones that have good property, good management, and cash.
Absolutely no question about that. I want you guys to do yourself a favor out there. Check out Lawrence's newsletter, Resource Opportunities. Lawrence has been around for a long time. He certainly has an awful lot of respect from both Corey and I. If you want more information on Resource Opportunities, simply go to our favorite sites section. We're going to be right back.